have behind you, and we put our money behind you because we're good at what we do. And I'm saying to people, and this video is dedicated to the bigger people that are in our databases and the small person just as well. It doesn't matter. Money's money, and the analysis is the analysis. And we are correct. And I'm telling you that right now, the current market environment, gold was up high today. Lots of things have been re-leveraging. It's an options expiration, and they bucked the trend the first 2 weeks. But let me tell you something, the realities will catch up to these markets. And you don't want to be on the other side of that reality in the distorted part of what's happening. And to find out more, I would get involved and take a free day trial if you're curious. So back to the SMF Street traders and investors worldwide. As we move forward through October, earnings season is that if these valuations and this little move in the S&P and the stocks walking up on light volume, they're just going to collapse, just like we said it would over here. We called that down move. Go find it on our video site. Live. We told people, get out. Bam. Look, the reality is, as we move forward, you have these phenomenal type of events and very weird behaviors within markets and exchanges that happen. But as we have told every people, we have been finding growth outside of the U.S. There are places around the world that are doing quite well, and their societies are doing quite well, and their incomes are doing well, and their companies are doing well. But the U.S. is lagging. We are not the powerhouse here. No. We're being beat out by China. We're being beat out by India. We're being beat out by Brazil. We're being beat out by other countries around the world. Singapore, look at their way that they do things. Look at where other parts of the world who do not live in exuberance are able to manage their lives using the SMF reality check. And the thing about it is, when there's failure, there's great moves on the downside, just like this. And we got this move. We know what we're doing. But then again, in the re-leveraging, meaning going up, and the earnings trough for wholesale, and then there's great moves going that way. Then we called the top, knowing that 2010 was going to be a lower growth rate in the second half of the year, where everyone was so bullish. Oh boy, we're going to go to 1,350 on the S&P. We're going back up here to 1,400 on the S&P. No, you're not. And the analysts don't have it right either. And they better get down to the core, inside, intrinsic wholesale value about forward-looking earnings and forward quarters. We're taking that U.S. growth rate down for the next several years. We did it a year ago. We mapped this all out. We planned it all out. If it's your first time seeing the video, I would stay tuned and be coming back every day. But more importantly, if you want high-risk management training, we've got 90-day modules. We got the 52-week school. And we have so many different services to offer you. We're willing to offer them to you. But you got to be accountable for you. You've got to take the next best step for you. The little 5-day training courses that people put out ain't going to cut it. If it did, I'd be doing that with people. But I don't do that with people because that is not the reality. It's going to take me a long time, day by day, trade by trade, long, short, managing risk for a period of months, but you can participate and start getting that value right away. You need to take that step moving forward because you deserve to take these moves down. You deserve to take those moves up. And there's a big hole down here. Look at here, right here. Let's draw that line. There's a lot more downside risk in lower growth environments and deleverage environments than there is to the upside. The upside is limited, man. I mean, that's where the reversal was at 1,200. And just remember, there are very different phases and mechanical phases of exchanges you're not aware of because they don't let you know that stuff. They're not going to let you know what their operations are. We will let you know because we're one of those very few people in the world who have been and understand, and we developed a platform that will decipher these things for you. It doesn't have an opinion. It's pure mathematical. Once again, S&P forward-looking earnings. There's a big room to go down. On the upside, you have little room to the upside versus the downside risk. Better know your sectors, better know your companies, better understand their guidances, better be able to understand their earnings, business model. We'll teach you all that. We've been trading these publicly traded companies for the last 3 decades. The new ones that have come out, there are various different ways of trading S&P technology earnings. There's new technology, there's old technology. And we're always going to have bright spots. The brightest spot is that the U.S. is not up to par with India and China and Brazil and other places. Why don't you think about Argentina did well? A lot of emerging countries did well. And most emerging countries do not believe in reckless endangerment. What does that reckless endangerment mean? That means their deficits are in control, much better than the U.S., and their growth patterns reflect it. There's a lot to learn around those subjects. And it's not sitting there in the chat room and talking to a bunch of people who don't even know what they're doing. Stay away from that. That's not proactive for you. What's proactive is getting in here and learning step by step what it's about. With the results, with the analysis to back it up. That's what it is about for you. And SMF Street opened the doors to Main Street. Lower growth rate. Earnings are going to start coming down, just like we said that the earnings were going to collapse over here in 07, and they sure did. And they sure did in a big way. And that earnings growth from here to there is starting to get lower, moving forward. Have a good day, everyone. Remember, education and trading is just as wealthy as being a millionaire, because you know how to manage your life and the outcome, and understanding the gimmicks of Wall Street, understanding what everything is about. That's what we're here for on a daily basis.